over. Let's just now overall start going through all of it. So starting off, everybody. Hopefully everybody can see this, by the way. So we're starting off here. Before overall, you're starting to read this document, please, everybody. All right, and I'm really going through and highlighting because of the importance of this is that you should watch the Become a Goat playlist on my YouTube before or meanwhile reading this document. Of course, it's okay reading this before and then watching the videos and then reading it again, but if you're just reading this document, you won't overall know all of the composed stuff in this. Alright, and it should actually be STE here, so I'll actually change that right now, because like before it was TSE, but now pretty much you guys changed it. You guys wanted the name STE instead, and I think it's better, right? So watch this meanwhile you're reading this, or just before reading this document and going into the model, because in the videos you also will be provided with much more context to the individual things. But you'll find this in my server. If everybody goes to the STE model, you'll find this document, this particular document, so please feel free to go in there. And you will also find just below that this STE data collector, so hopefully everybody have checked that out as well. As I just, you need to collect data on the individual setups or STs you're taking, alright? Otherwise, you're not going to come anywhere, right? Because literally, that's how you become profitable, I would say. The data is the key, alright? It's not the model you're trading. You can trade supported resistance. However, the data you collect on it, and I mean like forwarding data, so the data you're pretty much collecting on the trades you have taken, that's overall where you will find profitability. Because like I've covered previously, that's where overall you will see your past mistakes, but also your past things which you have missed in those individual trades, which you could easily improve upon. However, if you don't have the data, and if you don't have like the library of the trades you've taken previously, and you can't really go back and look at those trades, how are you then gonna find out what overall you need to improve upon? Then it's just like guesswork, and it's more or less like gambling, I would say, as well. So please collect data. Alright, but ST is more or less composed of two things. It's pretty much time and it's liquidity. Alright, it's fairly simple. So the time aspect of it is fairly simple because it's like the Fed wire injection times, and I'll pretty much send, or I'll pretty much add in the document, the document from the central bank I got this from. But it's more or less when the Fed wire is most active, so it's from 9 to 9:30. Preferably the high will get created or the low will get created from 9:10 to 9:30. And same thing goes here. And of course this now has not changed. Because now the people in the US also have pretty much changed their time. So this previous week, it's very special because it's the daylight savings week, where we get that like extra liquidity injections, thanks to that you have an extreme overlap in the kill zones from two opens, or you have the close overlap with a London close overlap with a New York open, because the people in the US pretty much they don't move their time until like 1 week later. So this overall will be the correct times. However, if you were to trade ST now this last week without any change in time, you would have overall not moved their time. So it would be 9:30 for us in Europe. However, for the people in the US, it would still, or the New York session of the Fed wire injection would be 14:30. So this would be 14:30, and this would stay the same. Alright, now it's the same thing. Yeah, I'll cover how you detect spooling programs as well. I'll cover that, definitely. No worries, bro. Anyways, then you pretty much then you find the drawn liquidity, so real good drawn liquidity, and of course we should add in a fourth step where you actually, or like it should be before this, it should be the narrative, which overall I cover here. So please check that video out as well. It's pretty much narrative plus ST, super good video, where I cover how you combine narrative plus the ST model and how I pretty much do my buys. But I'll cover what a spooling program is, etc, etc. And of course this is like the footnotes where you overall, where I've seen it, this never works. So in these certain circumstances, it pretty much never works. So of course, never works in a spooling program. That's like a buying or selling program, like when we have a continuous day of a continuous price delivery. So of course, if a whole day is bearish, then it won't work, because this overall works in trending conditions, you could say, not in spooling conditions. I'm not gonna cover spooling, or aka buying or selling programs, but it works best on a 1 to 5 minute time frames. As on the 15-minute time frame, it will be hard to spot the high or low. It works on all time frames, by the way, because it's fractal. However, it works best on overall a 1 to 5 minute basis, as that's where you will see the low or high, or the range of the thing of the Fed wire injection. Then of course it works on all assets, so just keep that in mind. And of course I've covered this already, so here's like a first example of a simple STE. This is without any levels, etc., etc., where you have the Fed wire injection Fed wire injection time, right? And you have the Fed wire injection range. That's what I wanted to say. And you have the total soup of that, like, and you have the low of the day more or less here. That's like a simple STE, right? Where you, like I previously said and showed you guys, is that pretty much if we have a low here and we sweep that, that will most probably be the low of the day. Now talk about when and when not you will find this, and when and when not you will not see this. And of course in this particular instance we had the key level under this, and we did not trade into the key level. Alright, we did not trade into the key level here during that particular time. Instead we waited to where? We waited to the other particular sweep of this, and we swept this because the key level was under this, right? And we waited for the other time for it to trade into it. That's what created the low of it. Hopefully everybody understood. And I'll show you guys deviations because it's in this document as well. Here I have another example. I'll not go through this because I've already went through this. But here above is the easy version of the model. Now let's just go into the more in-depth stuff of things. So of course this is not like a TJR style model. This is like much more in-depth, and something I think a lot of people actually love, because I love a little bit more in-depth stuff. But as everybody can see here, so you start by adding the Fed wire injection times from 9930 UTC plus 2. All of this is in UTC plus 2 times. If you want a UTC minus 4, just overall I would say I think minus 6 hours from this, or take away 6 hours from this, or subtract. But you could overall start by adding the other Fed wire injection time, and of course while you're doing this, add deviation on both sides of it. So add the deviations from the high to the low of the range, and from the low to the high. So you do it like this if you go in and click on it. So you have like the fibs here, and the fib settings I'll show you guys. So let's just cover this quick question straight away. So the win rate of this model is determined by the individual trading the model. You will never have a determined win rate on one singular model. Alright, so anybody saying, oh, this model has like a 70% win rate, like if your logic and pretty much your brain just goes in and thinks about it a little bit, because win rate is never stagnant, and it's different from individual to individual. Alright, it will never be like a fixed win rate unless it's a fully mechanical model traded by an algorithm, if you think about it, because it's still going to be different individuals pressing the buy and the sell button. So it will always be different. So like there can never be a fixed win rate to a singular strategy. Meaning, what? You can have an unlimited potential of win rate on this singular model, but you could also have an unlimited potential win rate on support and resistance. Alright, support and resistance does not have any win rate. ICT market maker models does not have any particular win rate. Alright, and anyone backtesting it, etc., is going to be the individual backtesting it, etc., to determine the win rate of it. Alright, every model and everything can work with the data supporting it. Alright, and the data comes from the individual themselves. So, and the singular model will never have, if you think about it, it's like unlogical saying one model will have a singular win rate, because this win rate will never be the same for any singular person, right? Either the model will overall work for you, or it will not. Alright, that's simple. So yeah, like, see, I'll cover all of these questions later, but So here, if you look at it, right, if you look at it, this is the fib settings, everybody. So take a screenshot of this if you'd like to. This is the fib settings to overall, or overall which I use. These are the fib settings. Perfect. And here you can see once done, you'll pretty much find it like this. And you also add the other time of the fed wire injection, or the second one. I mean, then you look pretty much alignments. Those who align, this, and I think those were it. You pretty much extend and use for the next given day. And of course, they can only be used once. So once they're traded to and used for a swing high or swing low, that's it. Alright, you can never use them twice, and you can never extend them throughout 2 whole days. Only one day, right? So one singular level works only for 24 hours. Alright? If used. If unused, you could maybe, possibly guys, here's some sauce, use it 2 days. Alright, and if we trade to it, right, in one singular level, that would be, or in the time parameter, that would be low. And if we trade to a level in the time parameter here, that would be the high. If we don't, we will sweep that later, trade into the key level, and then trade up, aka creating the low with the level after this and creating like the STE model, the normal STE model. Both of these are STE models, like this is an STE model. However, if we sweep this low in another key level, that would also be an STE model. Hopefully everybody understood. Now I'm gonna cover the STE models I've actually taken during this week's price. So I'm overall gonna start sharing the screen here to the overall EURUSD, and I think everybody can also check the live executions and also the funded account. Note, this was only evaluations, so this was no live account. Wait, let me just think here a little bit. Yeah, so this first one was just 2 evaluations. Third one I'm gonna show you is just a live account, and the second one is just a live account, so no evaluations. And the third one again was the one I passed all my evaluations on. So the ST works on any given trading instrument. So it works on futures, it works on options, it works on any given pretty much financial instrument. It works on CFDs, whatever, right? However, if you're talking about futures like indices, it works on indices, and I would say it works even better on indices. It works on commodities, it works on small commodities, big commodities, special commodities, works on exclusive, like more exclusive FX pairs, like for example Euro GBP, works on GJ, works on whatever asset you want to trade. Works on bonds. If you're into bond trading, you could trade it on bonds. Like it works any of the financial assets in the financial space, right? Works on any of it. All right, any of the given financial assets. So let's just overall go through this. Hope everybody can see this. Let me just go in here to full screen here, so everybody can see this much cleaner. So let's just start with the first range here. So what I used was overall key level. We had a key level marked out or aligned right here. And you can see pretty much we also swept the 930 high. So you can see 930 right here, 930 high, swept. That's a total soup. And I just waited for low prices. And of course, I pretty much used this, and I used, I think these, like more or less like, or we had like 1 minute high here. So I used like that as a total soup, and then overall went low here. But I actually went in on a 2022 re-entry model, and of course, how you enter the ST is up to you. Alright? But let's just dive through this. And I'll pretty much go through my thought process, etc. etc. For executions, please check my more or less like what is it called? The trades I take P&O. So please check that out for the executions for this. I can maybe add my executions later here. But overall, as everybody can see, we have 930 here. So 930 right there. That was the range I used for the deviations. And then of course we have 15, 15, 30 here. So 15 over here, 15, 30. And just noting here, I actually took this as well. So I took an entry here. I don't know if you saw it, but I actually took an entry here. And I took an entry here, targeting this equal lows right here, targeting the John liquidity which I had marked out. So the first step, right, is overall determining the narrative. what was the narrative for me? All right. So I'll just go through all of the steps here for the model, which I did real time, right? When I took it. So I determined a narrative. The narrative for me was bearish. I was looking for a low getting sold in. I was looking for this getting taken out. So that was over my majority liquidity. Did not get all of that taken out, but of course we took out this, which I took a major partial here. So that was just real crazy, real nice. So as everybody can see here, narrative was bearish. I was looking for low prices. Please check out the narrative video once again, just telling everybody if they're wondering about narrative. I'll pretty much go through my predictions later in this call as well. But as everybody can see here, this is the range. So we have the swing low here. We have the swing high right there. Pretty much what you do is you do this, right? And you do this. And of course, this is how you mark out the levels for the next given day. So I would not use this level for the current day. You could. However, I used it for the next day. So this was what I marked out. And you can see here was another entry here. So I took first entry right there after this, which was an STE lower. Because I was targeting this, as you all know, because this was my John liquidity. Narrative's bearish. I was looking for higher prices, but or low prices. I'm sorry for mixing those two up. But you see, pretty much here, you find a perfect level here. So right there, this was the level I used. You can see we also had 9930 here, just prior to it. We swept that. You can see here, we swept that right there, and my natural entry was right there. And as everybody can see, I'll add in the executions here as well. Crazy good trade. And here you have the executions. Oh, okay, it could not paste. Oh, it's too large. Let's just try here again. No, it did not work. Sorry guys, but everybody, please check trades I take P&O out to see the executions. Could not add it in, as everybody can see here. Had some problem. But entry right there. Stop loss at the high here, because it was protected. You can see the level here. You can see the level was 0.5 here and 0 here. Works perfectly. You can see we did not consolidate through this. It was pretty much like a mean level, and then of course this all engineered loads of buy side liquidity here, which was the second trade I actually looked for, and I'll go through that STA as well. So I took a major partial here. Just note that right there. Then right there. We did sell side liquidity, and then of course I had still runners, but I moved down my stop loss to here. Alright, so I was stopped out here. Still made some great profits. The overall setup was like, I was thinking like a 1 to 10 here. So I was thinking like this. So amazing trade, right? Amazing trade, amazing ST. Works wonders, right? So you have the turtle soup here, and of course you could enter on the liquidity, because note this also time-based liquidity. And whenever you have liquidity and it trades up to that liquidity again, you can use that liquidity again. So it pretty much becomes like a breaker. It's amazing. Super good. And that's some sauce, by the way. So let's just overall continue here. So that was the first trade I took with that level. And of course, works wonders, the ST, alright? Here it was also, by the way, an STA. So this was an STA and an STE in combination. So of course you can combine it with any other given model for buys. In this case I used an STA and an STE. Alright, but I relied mostly on this re-entry for this STA move on the ST, which is the individual model. The re-entry you decide to the given STE move, because the ST will always go for the swing low prior to the time distortion. So let's overall go through this. This was the second trade I actually took this week. Was also an STE. Pretty straightforward. We pretty much had the levels from this given day. So we have the 9930 here. I forgot, but I can just add it in here again. So 9 right here to 930 here. So I use the levels here again. And look. Alright, look. If I were to do like Casper SMC, I would say, oh, it has 100% win rate. But if I were to trade like this on a long run, I would estimate, for me, it would be at least like 60 to 70% win rate. Alright, with an amazing RR, which is crazy if you think about it. Now, I don't go around saying I have a 100% win rate because I took 3 wins with an STE in a row. I don't just do that, because in the long run it's not true, and that's what I want to tell you, right? So it's not the case, right? It's not the case. So even though I took 3 winners here, in the long run, I would never have that high win rate. All right, this is a very special case, very special case. And just prior to this, I had my first losing month. All right, so as everybody can see here, we used this. This was the first STE I took it down here, but now you can use this as deviations levels for the next given day. So you can see here we project this swing high to the swing low. We find alignments between it to trade the next given kill zone and the next given opportunity of an STE we get. And of course, you see here swing low, swing high here, right there. Because that first thing works wonders. All right. And I just wanted to reiterate this again. Like it's amazing. Yes. All right. It's just pure amazing. All right. So in here, I think I said 1355 would be the low, right? But what I actually did, you can see here 930 here. Wait, where's 930? You can see, and here you have some extra sauce, right? When we don't have a wick on that given, you just take the nearest swing low to it. Alright, so you take the nearest swing low like this, because usually we have the range. Like usually we see a swing low and swing high. You could particularly use this. You could use this, like that's what I want to tell. You could use this swing high, swing low. For deviations, I would not use that, but for overall liquidity purposes, the liquidity of course will be resting here. Like most liquidity will be resting here compared to this, right? But you could use both. You get it, right? So use the nearest swing low if it's like, you could say 10 minutes away, right? So not a far-fetched stretch, right? And then of course 930 here. So you can see like how it begins to look. Like it just had a key level under this and we just swept this and total souped it up. That's just what I did here as well. So it's just beautiful. Another beautiful trade. Let's just see where I had alignment here. I think I used this right here. With, of course, I have not talked about this yet. This is something I'll talk about later. But of course, the quarter, you can actually take the inner ones, right? So you can take from the 2 to the 1s. You can take quarters here, all right? And I don't think I've said this, but like you can add not quarters like this, but you can add quarters on all of this. So you have 0, 0.5, 0.75, 0.25 to the 2. Alright, and I'll explain it later in this call why pretty much are profitable using the strategy. I don't know. And then we have 0.25, 0.5, and then 0.75 right here. And then we have 1 right here. Right, and I'll also answer all of the questions later. And they have 0, 0.25, 0, but you can't add it over the 0.2. And I'll explain why that is later, because I'll explain the insignificance of the number 2. In that given range, because this is all math, right? So what you're doing is that you're just taking the manipulation, right, from what the smart money have done, and you're just extending that through price, because this is what algorithms do, right? They extend ranges, certain ranges during the day outwards, right? And because this is like that range multiplied by 2, it's up here. That range multiplied by 3, it's up there, and that's what algorithms do, all right? And that's what we do because we follow the central banks. But you can say pretty much just under this is why I pretty much, once I actually retested this level multiple times, that's when I overall entered. So 1355 here, that's what overall I entered right there. So I did not take it down in here, I waited for it. You can see, like you can wait for it, alright? So have no stress. But that's, just a sweep of this. So just a simple turtle soup here, like I told everybody. But it's also an STA. So look, it's also an STA here. So my entry was this. Stop loss below the low here, and I overall targeted the high here. So look, amazing. 1 to 5 here, perfect. So that's just the second trade I took using the ST. All right, everybody, amazing. All right, and just want to reiterate, you could also have done this. You could have ping-ponged it. So look, you have news here. Bam, next candle from the news is what? A macro. So look, what can you do? You can ping-pong it, and what do you have? You have an alignment. Alright, look, you have an alignment right there. We traded through the alignment. You could wait for it, wait for a macro. You could have entered on the alignment. And I think the alignment is pretty much here. So you can see 0.5 here. You can see 0.5 here. Alignment, you just traded through that. And you can see on the 1 minute, we just rejected from that. And of course, you can have the stop loss at the high. Macro, you can see 1510. So you get a ping pong this, targeting the other. So you can see down there, perfect win. And down there, perfect win. I did not take this. I was looking for this spot. I did not take it, as we just traded through the level. You can see real strongly here. We traded through that. Let me just show you guys. So you see 0.5 here and 0.5 here. So by the way, like here you can use quadrants of this, like P series quadrants. Here you cannot, and here you cannot, but you can still use 0.5, like I've told. And it's 0.5. You see, traded through that real strongly, and maybe possibly we had another alignment just over here. So you can see, like real close to this. You can see here. Did not trade it, but I used this level, right? I did not use this level. I used this level, but still, it works wonders, right? So you can see macro right here, with 10-10 entered. This was what I looked for, but you know, sometimes that you know does not really work. But you could also have re-entered right there with a rejection block. On another broker, I think you trade up there, but not on FXCM because it's a little bit lame here. It doesn't always follow the prices. Target on this and ping ponged it. You could have possibly done that. So that's another example of an ST, right? ST and STA is quite similar. Yeah, definitely, bro. ST is like the mini version of an STA, I would say. So it's like a mini time-based liquidity version of the STA. Anyways, here I'll show you guys the pretty much last STA I've actually taken. Exactly, both, like that's the only thing I use. Like a lot of people say, oh, you're just overcomplicating, but what I really do is that I use higher time for narrative and I use liquidity. Alright, I don't use any other thing than time and liquidity. I don't use like complex PD arrays here and there. Of course I use some, but I don't use like this complexity like people think. Alright, I'm not an enigma guy. I'm literally targeting liquidity and the most obvious liquidity injections from the central banks. If you're trading currencies, just note that the commodity of the central banks is the currency. They're always in there. They're the ones moving the price. All right. In indices, it's a little bit different, but in at least in a foreign exchange, it's 100% manipulated, 100% controlled by the central banks. All right. Anyways. Exactly. Externals is the only thing which makes it different. Completely right. Focus. It's just externals. But this is still very, very goated. This is still like perfection. I would say this is perfection. I love this. Alright? I love this. It's just perfection. Alright? It's just, this makes me cry when I see this all the time. But let's just use the levels in here. So let's just add this and let's just take away this. And I'll show you the final ST I took. And the final ST is a little bit different because, as I said, it would cause a move to happen, right? But how you enter that move is a little bit different, and it's a little bit depending on the time you have of the day. You maybe missed the initial downwards move, you maybe missed the initial turtle soup, which in this case, this last ST I did, or STE I did. However, what I did was I just re-entered on an SB, alright? Because as y'all know, after the Fed injection, we also have the SB macro. Alright, I don't know if you guys know that we have an SB macro after it. Please, everybody, I pretty much, at that, I pretty much re-entered, what is it called? At the SB macro, right? So, the silver bullet macro always comes after the Fed wire injection time. I don't know if you noticed that, but that's some major sauce, guys, so, like, crazy. So I just entered on the SB. Right after, which is something you can combine, right? You can combine like this with SB, like silver bullet maybe. You guys get to decide, right? That's why I traded silver bullet so much before. It's just great because this is not something new. I've used this for a while, like I've said, but I've never like created this like more or less, you know, made it clear like a model. But let's just do this. So of course, going through it. So starting off like 9:30 here. Let's see here, 9:30. This was the range I overall used here. 15:30 here. 15:30. A little bit consolidated, right? So you could maybe use this and this instead of this and this, but you could also see it. You'll notice. And of course, here you could use all the way from here to here. So all of that liquidity injection right there. And then of course, this was overall. Let's just see here, 9:30 here as well. So 9:30 here, and this will be a little bit of a different because here I used the liquidity here as a target down, and of course it's just to swing low here because you can see manual. This is what I call time distortion, right? This is what ICT called time distortion. I'll go through it later, but let's just add the deviations in here, as everybody can see. So everybody can see. I'm sorry, guys. Bam. As you can see, like what I have algo 2 is because this is something I would cover later, but you know, it's more or less this, you know, deviations up to 2, which is something you can't use, right? But not over 2, but you can still use the 0.5s. And here, like in this case, you maybe would opt to stay out and take an STE because this range was really big, but it still works. It still works. Like I'll show here. Still works real good. Now, of course, this was a little bit different. Oh, wait. Yeah, it was. It's correct. It's correct. So, of course, what I used here was this 0.5 and this 0.5 to get the top tick here. So it's wonderful. Alright, guys. Wonderful. Right there. That's what I used. Now, of course, you saw I used this as like a time-based liquidity, right here. But I also noticed that this was a spooling program. So does it work here? Of course, you could. It could work, right? And we just engineer basic lows. But this is like a spooling program, and in this cases, the ST does not work. Now, how do you know a spooling program is going to occur? Now, you know it thanks to some things. All right. Most notably, you could look at the Asia CLS. I don't know if you guys have seen this, and that's something I'll cover today at least. But this is the indicator, the Asia range Nico 948. If everybody wanted to use this is the settings I use for the time-based liquidity of the Asia range. But overall, if you see the Asia range being in one continuous direction, all right, throughout the whole day, alright, listen up, guys. This is some major sauce. If you see the range of the given Asia range being in one singular direction, alright, that will give you a spooling program. So I'll show you here. So for example here, one singular direction here, spooling program. I'll show you multiple other times where we have that. This is a typical spooling program. That's why I'll look for a short here. So that was why at STE. And of course you can use this for bias as well. You can use the Asia CLS as bias. But let's just go through. So you see here, typical one given direction, spooling program lower, one continuous direction, like no chop around. Like for example here, you'll see chop around. Because what it does is like a mirror of the given day, because it's like the central banker's planning period. But you can see one continuous, and you can see one continuous spooling program, right? So I love my Asia range. Alright, it's the best thing I've ever created, right? It's crazy. Yes, alright, I love that your eyes is opened. But pretty much you can see the range high was here, the swing high here. So what I used, right, was a simple turtle soup. However, right, like I said, if we overall have not taken and we have not traded into the given level during that given period, we need to wait for price to deliver up to that single level we got from the previous swing high, swing low. And of course, we had this. We were waiting for this, alright? Because we had the level marked out here, or at least I had this marked out. However, I missed it. I had an alarm here, alright? I had an alarm here, so my alarm went off, but of course I missed it. So the initial down movement here, I missed. So I was like, oh man, I'm gonna miss this because it's gonna take this time is liquidity here. It's gonna take like this FedY injection time is liquidity here. But what it did was that it left equal lows here. Look, it left equal lows here. So what I thought once it actually traded up to this was that I thought like, oh, what a clean run is gonna be run down lower. So I entered right here. All right, right there. And I think everybody can see this in the trades I take P&L. And then bam, massively lower. So I used this as a target, and I used this, and of course I did not enter here because we had the level up here. Alright, so that's why I pretty much stay away from it. Because more or less here I think I entered somewhere. Or no, wait, I think I entered here. And I had my stop loss at the high here. Yeah, like this. Wait, this was my model. Wait, this was the trade I took, actually. I think I possibly, let's see if I can add in the execution so everybody can see this. And I was lucky because like the spreads were mad. No, I can't add it in. But everybody, I want y'all to check it out now, so you don't see I'm lying, right? So that was what I took actually to pass, and then I passed like 150k in evaluations. So the first and the second or the third, like the first I showed you guys, and the third, both entries on the first and the third was taken on evaluations of 4 funded X accounts. And the second was just I'm alive. But you can see all the executions on overall trades I take P&L. So you see all the STs entries and exits I taken. So amazing, guys, amazing. What do everybody think? What does everybody think? Do you like this? Right, and I'll continue showcasing like trade recaps of this because I love the STE. All right, it's my well, you know, one of my favorite things. All right, you know, I love the STE so much. It's like in my heart. All of my models I've ever created is in my heart. All right. Yeah. All right. Do you guys want me to go through overall bias now, like the overall predictions of what I think will happen? Yeah, guys, let's go through. But remember, big disclaimer here. All right. So big disclaimer here. All right. Let's just go to the DXY first, and then I'll pretty much talk about my disclaimer. So everybody, listen up now. This is real important. This is real important. All right. Hope you all right, pretty much before we go into this, hope you all listen to me at the beginning, because then you would know that I will not overall trade during next week due to major volatility in the markets. All right, anything can happen. All right, that's why it's super improbable for you to trade anything. All right, I'm not gonna take any STs. I'm not gonna take any STAs. I'm gonna sit out, potentially trading Thursday and Friday. Potentially, I'll see how volatile the market really is. All right, so I'm gonna sit out, wait for overall Thursday or Friday. Cause if you all check, right, Monday is gonna be real volatile, or I at least think Monday is gonna be real volatile. Even though we don't have any news, we have presidential, Congress, and we have the House of Representative elections during Tuesday. All right, and that will go on throughout the whole day. All right, and that will overall get priced in during that day, meaning it's gonna be crazy volatile. All right, so don't even think about trading. If you, of course, if you're a professional, whatever, you can do whatever you want, or profitable or whatever, but don't risk any money. Like that's just what I want to emphasize on. All right, that's what I want an emphasis on. Now, Wednesday, it's going to be crazy volatile, because what do you have on Thursday? You have monetary policy, all right? You have monetary policy, etc., all right? Now, why I'm saying I will maybe trade Thursday is because I'm waiting for it to get priced in. I'm waiting for the market to dive down, to die down, like, get less volatile and get less manual intervented, because they're going to be major manual intervention, all right? And then I'm maybe gonna trade Friday, depending on like how the market feels to me. But of course, I'm still gonna overall forward test. I'm still gonna look at all the things. I'm still gonna overall put analysis and give you guys sauce, etc., etc. So everything is gonna be normal, but I'm not gonna risk any money during this week. I think it's a crazy bad risk to reward, if I put it this way, right? So the risk is massive, while the reward is very little. That's what I put in. That's why I don't want to put in any money, risking any money here. Anyways, let's just dive right through this, and I'll answer all of the questions later. But this will take probably like 5 to 10 minutes, right? But starting off, as everybody can see, pretty much we have done a time-based liquidity sweep of previous weekly high here, and I think overall, I would most possibly speculate that this high most probably will stay intact. It could do one final push into this Reaper inverse fab gap here, before overall settling in and high and then delivering lower, because as everybody know, like if you look at the daily, right, I've overall waited for this market maker sell model for a while here. All right, I predicted that we would have an original consolidation. I predicted that we would have a reconsolidation here. I predicted that we would have a smart money reversal here. If you guys go back, and I told everybody to screenshot this, because literally this is what I predicted long time ago. Now, of course, like I said, we would have the delivery lower here as well. Of course, we're gonna have a reconsolidation. You could always, like, once we actually start delivering here. So of course, if you think this is gonna be the small reversal, you could grade this price swing down to the previous yearly low. So you could put deviations like this, and then you will pretty much know where the reconsolidation is gonna be, because it's gonna be at 0.5 right here. Which is also, if you take from the left side of the reconsolidation curve to the right side of the reconsolidation curve, you'll pretty much find the reconsolidation more or less being in this area, which is something I'm watching, right? Told everybody this, like, I told everybody, hopefully someone have a screenshot of what I told everybody, but at least this is what I talked about, right? I talked about this buy curve, and I talked about this sell curve before it happened, long before it happened, weeks before it happened. Anyways, as everybody can see here on the monthly as well, or we can even go to the 12 month, You can see pretty much previous yearly low is almost already here, like right there, as everybody can see. And I'm bearish, right? Because I see this right here as a big market maker sell model, and everybody can see this if you go like to the monthly here. So you can see market maker original consolidation, small reversal in the form of trading to this fair gap right here, and a premium or OTE of that given higher time frame range, swing high, swing low from 2002. Then of course this is the reconsolidation we've been stuck in for 2 years, and of course we're gonna do a massive delivery low because it's gonna be bearish, right? The externals is bearish, is telling me it's gonna go lower soon. All right, actually the externals is bullish now, but soon they're gonna be bearish, right? And of course then I'm gonna look for low prices. Now of course if you go into the daily, you can see pretty much where all the periods align, or what I think is gonna deliver is most probably this will be the high, or we will just deliver into the Reaper and then deliver lower. Either way, I'm looking for low prices, and either way, I'm gonna stay out because this high will get taken out this week. Then, all right. However, it could equally as well. Everybody trade down lower this week. So it could trade up higher here this week, and it could trade down lower this week. That's why I'm staying out. All right, because it's gonna be crazy volatile. Then next week, what I think is gonna be bearish. So even if we have settled in a new high here, trade into this, like with the news, etc., etc., I think we're gonna deliver lower next week. So either way, I'm going to be bearish next week for the DXY, aka bullish on any other risk on assets. Right? That goes for Bitcoin, etc., etc. So either way, I think bull run, etc., etc. will start next week. Of course, Bitcoin can run the crazy if Trump wins this presidential elections. We'll see, but I'm not trying to speculate in that. Right? I think hopefully, let's see who wins. Right? But I'm not too political. Right? So yeah. I'm into the markets, right? But of course, this is what I think will happen, right? So I most probably think Monday either will be crazy volatile, like a crazy sell program, like then if we have a spooling program, because what did I tell everybody? A spooling program characteristic is. Please write to me in the chat now, like please tell me, like the characteristic of a selling program, if anybody remembers. Single direction Asia range. Completely right, bro. Completely right. That's amazing. So if you have a CLS Asia range being in one given direction, you're pretty much gonna see a spooling program in that given direction. Simple as that, right? Simple as that. That's a simple characteristic, because what Asia is a planning period for the small money, right? Yeah, it's time-based liquidity. So of course, I think we're gonna deliver down lower. Either we're gonna have a big buying program or a big selling program, like a big sell spooling or a big spooling for buys. Reaching for this high, right? Then of course I think Tuesday is gonna be bearish for the DXY. So I think when the president is priced in, I think it's gonna be bearish. So Tuesday massively bearish, Wednesday massively bearish, Thursday massively bearish, Friday maybe bullish, doing a new or a TGIF. So doing a thank God it's finally Friday. So massively bearish throughout the whole week, except for maybe Monday. That's what I think. My predictions, guys. So please don't follow me, because it could go opposite direction. It could like go crazy here. Alright, so please just stay out of it. And then do a TGIF. Alright, and the TGIF is what I'm gonna trade. That's amazing, focus. That's amazing. Look, guys, this was what I said like a couple of months ago. That's amazing. Thank you so much, focus. That's crazy, actually, well, how accurate it was, but I'll pretty much place it in here. I think I can. Yeah, so look, this was what I said would happen in some call. Look, this is the DXY, right? So here you have the original consolidation, right? I said it would have regional consolidation. Maybe move down one final time lower here, as everybody can see. Sweeping this low, sweeping this, and I think this was the low right there. So we swept that. Still with regional consolidation. Look, reconsolidation here with the equal highs. Look, equal highs here. Reconsolidation. I actually thought the small money reversal would be over here. However, that did not happen, right? And it just went a little bit over here. But I think it's still gonna be small money reversal soon, and then trade down lower. So I think this will start delivery soon, right there, like I talked about. Anyways, vice versa on USD, like I talked about, because it's end risk on assets. So of course here I'm overall watching potentially it reaching down lower on Monday, and then Tuesday, Thursday, and Friday being, or at least Tuesday, Wednesday, and Thursday being massively bullish, and then of course maybe a TGIF happening on Friday. So up. I'm not gonna trade it, even though I priced in everything, because it's gonna be crazy volatile, and it's better just to take the TGIF here and then take the final push up here. All right. Hope everybody understood. So that's pretty much what I say. But I could also go the opposite way. It could just cleanse all of this trendline or phantom trendline liquidity. So you could just do like this. We'll see what happens, but it's gonna be crazy. So TGIF is it. Thank God it's finally Friday. It's I'll send you guys the video if you guys want it. Anyways, that's pretty much my higher time for narrative here. Only predictions, please, guys. So be careful with this. Don't trade, right?